and tiny houses and sheds. We will give everyone, Steve and Ed will give everyone a few minutes to get loaded into the session. For all of you who are joining, we're talking about tiny houses, um, building sheds, and the rodents that live under both. Which is a skunk that my dogs got very close to, but fortunately, it didn't spray.
Yeah,
I
very
mean, they
lucky.
were like this far from it, and it didn't spray. I don't know how that happens.
Very lucky.
Mhm. Good, everybody. One more minute, and then we will get started. Steve, you want to grab a hat while we wait?
Yeah. I go get my Candor hat, Ed. Just throw that on. Those are nice hats, by the way. Kudos to Candor for sending out nice hats.
Well, you should have worn it.
I have an entire wall of hats upstairs. Like,
Oh. We talked about the dress in our prep call, so I think Ed, you missed your opportunity to make sure that Steve had the Candor hat on.
I wouldn't twist his arm that way.
All right, we will go ahead and get started. Welcome everyone to the SIP, the space where conversation fuels connection, collaboration drives innovation, and industry leaders come together to tackle real challenges, just like catching up over coffee. The SIP is all about meaningful discussions that move us forward. At TMC, we're committed to fostering a forward-thinking environment where our members thrive, grow, and make lasting impacts. And today, we're digging into something we're hearing a lot about in the industry. And that is how we can scale mortgage operations without just adding headcount. And how can you do more consistently without burning out your team? So today's show is proudly sponsored by Candor Technology. If you've seen or have been watching where AI is making a real measurable difference in mortgage underwriting, Candor is a name that you need to know if you don't already. And we've gotten exactly the right guest here to make it real for us. So, first, Steve Jones is the Assistant Vice President of Mortgage Operations at First Merchants Bank. Steve, welcome to the SIP.
hello, thank you.
And joining us from Candor is Ed Karani, the Chief Business Officer at Candor. And Ed, glad to have you.
Well, thank you, Jody, and thank you, TMC. We're just grateful for the opportunity to join the SIP today and excited for the conversation.
Awesome. And we're going to dive right in because we have a lot of content to cover. But before we get to the first merchant story as a case study, I want to make sure that everyone listening has the right foundation. There's a lot of noise right now about AI and mortgage and tools that touch a piece of the workflow and call it transformation. Let's set the record straight. What is Candor actually doing and how is it different from what else others are doing?
Yeah, great question, and thank you, Jody. Most AI in mortgage today automates tasks, reading docs, extracting data. It's useful, but it doesn't underwrite the loan. Candor's different. We are the decision, and we're the proven decision. So we apply investor guidelines, we push conditions into the file, and we begin clearing them the same way your underwriter would. But we do it deterministically, and what that's important because it means the same inputs get the same outputs every single time. It's auditable and explainable, and more importantly, proven over 3 million underwrites. And why does that matter? Actually, enormously right now. If you think about the recent GSE, Fannie, Freddie that are both requiring AI to using credit decisions to be explainable and auditable. Generative AI can't do that today. It's just not possible. And fortunately, Candor can. And we're excited that it was built that way, and it's been proven over 3 million underwrites to do it consistently and correctly.
And I do know that your platform has evolved over time because you've been here, you've been in this market before, people were talking about AI underwriting, more so AI decisioning, because I think a lot of people talk about underwriting that do pieces of it. But walk us through what is new and what are the meaningful upgrades for lenders already in the platform?
Yeah, great question. Kind of makes me laugh because I don't know if I'm the old guy or the OG when it comes to underwriting. But the platform has completely changed, and it is for anybody who hasn't seen Candor in the last 6 months, it is eye-opening. lenders can now completely work alone inside of Candor, meaning you can eliminate window switching, delivering a complete loan workflow. What I mean by that is you can upload and index documents. You have full data validation. You can link docs to conditions. You can add comments, clear comments. You can fulfill, clear, or waive a condition, edits, full editability of the wording of the conditions, suppress conditions in addition to what we already do around the income analysis and asset analysis, is what we've built is a platform and a single UI that allows you to process your conventional FHA and VA loans. And more importantly, now with the most recent release, you can use the functionality that we have around indexing and data validation and some of the income calc for non-Candor eligible loans. And so you can have a consistent workflow inside your organization or what was normally Candor and non-Candor files now all can go through the same workflow and the same experience. Beyond that, sorry, I could go on for days. I'll try to keep it short. But beyond that, we also have our AIM integration. Freddie has been live. What's great is we're seeing significant revenue saved from lenders not having to pay for the work number when you get rep and warrant. Fannie is about 3 weeks out from being live, so we'll have the direct integration. We'll extract the data from the documents, get your calculations from Freddie and Fannie and tell you if you have rep and warrant. And then we've also recently turned on our verification providers. So folks that are using, and whether it's VOA, VOI, VOE, we started with Argyle. What this means is instead of having those documents, which exist in the LOS today, go through an extraction process, we're digitally pulling the data directly from the provider. Argyle's first, account checks following, Truth. The list goes on and on. Experian, Equifax. We'll be pulling all that data digitally, so you get a near instantaneous response when you use Candor.
Yeah.
Those are
And
that's the short side of what's new.
Just a few things going on.
Yeah.
And that PDF bypassing is something a lot of lenders feel every single day, and more so with evolving AI and fraud. It's probably not realized how important this is. But I do want to bring Steve in because he at First Merchants is actually living this on a daily basis. So Steve, give our listeners a quick picture of who First Merchant is and what was going on operationally that had you looking for a better way to do business.
Yeah, absolutely, Jody. So, again, I mean, First Merchants Bank, we're a mid-sized community lender, headquartered in Muncie, Indiana. We do business throughout the Midwest, primarily Michigan, Indiana, and Ohio. But then obviously we have bank clients everywhere, right? So lending across the 50 states, but really, we've got our mortgage line of business has really grown tremendously over the last few years with, via acquisition, things of that nature. So, coming together with a bank from Michigan that really kind of doubled our size, our sales team, our operations teams. We kept everything intact. And so then it was just reimagining the system, right? And so both of us on legacy Encompass, right? And so creating a whole new instance of Encompass. And then comes the consistency and the process and the people and all those things. And just going through that process, I was looking for a way to and I love the way that Ed said it, right? It's the consistency of the output, right? So if your input is the same, your output's going to be the same. And I've been an underwriter, I've worked with underwriters, and sometimes we have our own little spin on conditions or whatnot. And it is nice to have a tool like Candor that can issue that decision with that consistent format. The condition verbiage of the conditions really provides us a lot of lift. Consistency in that. And as Ed said, the ability now to even edit the verbiage in conditions, should help us to enhance our customer experience too with our clients, right? Giving them maybe a little better terminology or phrasing as those things go. So pretty exciting.
Yeah. I've been an underwriter and I know the inconsistency that happens. And sometimes your brain's thinking one thing and you think it comes out completely plain in the condition. And then the loan officer or the borrower pick up that condition and like, what the heck are you talking about? What does this even mean? So I can see it from that point. And you also looked at a lot of options before landing on Candor. So what were some of the OCR income and asset analyzers that you looked at? What were they missing?
Yeah, well, and I think Ed said it right. Like there's so many products out there that may do a really good job at certain pieces of the puzzle, right? And it was just like, man, I'd have to have this to do this. I'd have to have this over here to do that, right? And uh, really, when I came across Candor, it was okay. It does all of that, but not only does it do all of that, right? It does make my decision for me, right? And it puts it out there, and as Ed said, it starts to clear my conditions, right? And then I have that backed by a warranty, right? So it really allows us to scale our business, not have to just because that we have an influx in volume or high volume level. My gosh, we're scrambling to find underwriters or whatever. We have a process in place and Candor in place that will allow us to get ahead of that and allow our underwriters to do what they do best. And really leverage Candor in a way that's going to hopefully kind of insulate us from shifts in volume.
Boy, we hope we get those shifts in volume, don't we? You started testing in October of 2025, and the adoption curve since then has been striking. And I know that this is something that many lenders they are asking. They almost are asking it before they're looking at the technology. Is what does the change management look like? What does adoption look like? But will you walk us through what you're seeing from the data since you started testing?
Yeah. So, one, you know, and like you said, we've ramped up steadily. We went, I think in, say the beginning of the year, right? I think in January we funded, 21 loans, and then 75 in February, 110 in March. I think April was around 140. May I think we went down a little bit, but that's I think just some other delays and whatnot as far as funded units. But again, we're tracking about 50% of our pipeline at any given time is somewhere around 140, 150 units going through. And it was just the tiered process of rolling it out and going through that adoption rate, just kind of easing into it, I guess.
Yeah. And from an time perspective, like what are the averages on the turn times, the underwriting turn times?
Absolutely. We've actually seen pretty good not where I want it to be yet, but we've seen some really good upticks. So, we're saving about 2 hours of underwriting time per file. In simple math, if it takes one of our underwriters underwriting any of our portfolio programs or even some of our conventional loans that aren't Candor eligible, if they're spending 4.5 hours, we're running probably 2.5 hours with just Candor alone. So we're seeing reduced touches, we're seeing reduced work rate, and then I'd also say that just idealistically, right, that as our underwriters continue to get more comfortable with it, and really all of them trust what Candor is doing, is that we hope to get that median average down to about 2 hours per file on a Candor loan, and I think on some we're seeing that, but I think as you have several underwriters, their comfort and where they are in their process is a little different. So
Yeah, so I was started to do it on my calculator, but when you take 2.5 hours per funded loan per year and multiply that out with the average rate of an underwriter going somewhere between 90 and 125 from conventional to those with the delegations, that's a substantial cost savings. Plus, what does that do for downstream with the loan officers and the processors, allowing them to move more efficiently and quickly through the process? I always say, people have a hard time focusing on multiple things at the same time, and loan officers having the decisions in minutes as opposed to hours or sitting in a queue to find out, like they're able to move on to the next loan. So the hope is that that would continue to drive an increase in their production just because they can move on and go focus on the next loan coming in the door. Steve, you said something that struck me. We've not, we are not even great at it yet, but we're already saving 2 hours. What's the goal? What's your target?
Yeah, absolutely. So, I mean, again, to get you talk about what you just said. We got over 70 originators. I've got 14 processors. I've got 10 underwriters. And so it really is. It's like some people are I don't want to say struggling, but they're still trying to figure out, how do I best utilize this in my day to day? How do I get the most out of this? And so, we're seeing again people go along that journey at a little different speed, right? So that's where I say we're not even that great at it because there's still people that are learning, and the system, as Ed said, continues to evolve and is even providing us even more things to learn, which are going to bring greater benefit, right? But I mean, ultimately, the target is just like I said, if I can get our median average in our underwriting time down to 2 hours per file or less on Candor loans, just like you said, doing the math, like the efficiency that gives me for our underwriters to spend more time on more critical loans or products, it's really going to free them up to protect our risk on riskier products, right? So that's kind of the goal. And we'll
Yeah.
see how we get there.
Yeah. So, Ed, I'm going to put you on a spot here because, Steve is relatively new to Candor, not even a year in, and seeing significant results. And I know that you hold like focus groups for your client base. So, what are some of the feedback and, what in the feedback loop, what are we seeing as results for those longtime lenders that have been using Candor from an underwriting time to, the number of loans that they're getting through the process at an increased speed?
Yeah, that's a great question. And what's interesting, I want to come back and I'll answer that directly, but you mentioned the comment about the LOs, and I know everyone's focused on underwriting. One of the pieces that's overlooked is the upfront piece. And, Candor is telling the LO upfront exactly what the underwriter is going to need. So you're limiting the back and forth, which impacts a lot of things, including the borrower experience.
Yeah,
So you can have near real-time borrower decisions by using the machine, by using
yeah,
Candor. But from
yeah,
a peer group, typically what we see, and this is probably, it's funny, everyone's focused on the labor savings, the underwriting productivity. And yes, it's there. We see at least a 3x. So if you're able to do 1.5 to 2.5 initial reviews a day as an underwriter, typically with Candor, once you trust it, and we always say go slow to go fast because you got to build the trust with underwriters. But we typically see that be 3 to 4x. And so if you're doing 1.5 to, let's round it up and call it 3, you should be doing, an underwriter should with Candor can be doing 6 to 8. So from a productivity standpoint, from a volume standpoint, you can grow without adding headcount. But just as important as a productivity lift, especially in this market with rates where they are, is the cycle time. And
yeah,
we are seeing an average of call it 8 to 10 day reduction in cycle time on a typical loan because you're not ping-ponging the file back and forth with processing and underwriting. A processor can completely work the file, get the full credit approval before it touches
yeah,
underwriting, and it's going to make sure everything's in the file. So you get a clean file with the underwriter should have everything they need to review. I say should because we've all played the role of underwriters, and sometimes they want to see something different. They don't have to because Candor's warranting that everything's in the file for it to be sellable. But that if you can see an 8 to 10 day reduction in cycle times at least a BIP a day in savings, that's I think almost more significant or could
yeah,
be more significant today than just the productivity savings today.
yeah,
Because we don't see the volumes growing, right? You've got a
yeah,
static team. So if you're cutting that time, and then ultimately Candor does provide a warranty. So if we cause a data extraction that causes a defect, if our conditioning is wrong, if our income's wrong, we have a Lloyd's of London policy that backs it up that says we will provide up to 25K per file to help offset the loss incurred by our defect. This is where, we're the OG. I'm still the old guy, but we've been doing this since 2019, 3 million underwrites, and we have proven the model. No one has that history and that view of so many loans to prove that the technology works.
Yeah. And it's an interesting point because wouldn't it be like you have to think like, what if an underwriter got a complete file the first time? Like that alone, just making sure the file was complete and not asking borrowers for more documentation because the loan officer and the processor are trying to guess what the underwriter is going to ask for, and they may be asking more from the borrower, giving a worse customer experience for stuff that is not needed. So, great point from that perspective. But are there other areas that you're hearing from, cost savings, time reduction from your other clients?
Well, again, with our recent release of the Freddie and Fannie integration, the avoidance of the work number, I mean, it pains me to even say TWN, um, but there's significant, and it's not, again, look, it's not 100%. So you're still going to need to call it, but if you're seeing 30 to 40% reduction in the calls and the need for a work number because we've got your direct integration to Freddie and Fannie, and you've got a rep and warrant from Freddie and Fannie on income, great, right? That's significant. And so that's one of the real savings we're seeing. Here's another piece I will say, and it's back on that the work that's required when you go through your post-close review, as well as things coming back, because Candor is confirming and going through that full data discrepancy across the file, we're ensuring that it's a clean file, so you're not having as much work come back through to be
Mhm.
re-reviewed, re-underwritten, and cleaned up the file. And so again, we haven't measured that because it's just, I call it icing on the cake. Everyone's
Yeah.
focused on the underwriting, the fulfillment process,
Yeah.
but that translates all the way through the life cycle.
Yeah.
Yeah. So you just graduated to the GOAT instead of the OG because you got an amen. So that's something to be said. Before we go back to Steve, Ed, I was at Ohio MBA last week, and a lot of larger lenders are working on technology, and a large lender in the Ohio market that is doing over 10 billion in production talked about the technology staff that they have, but he kind of shares a philosophy that I've often talked about. Like, I don't understand why at least 70% I do realize that there are less vanilla loans or cookie cutter conventional loans today just because debt ratios are so high. But on why are not 70% of loans going through the process with the amount of whether it's rep and warrant relief from the agencies, whether it's your Lloyd's of London process, are you hearing clients like giving that up and just allowing the technology to underwrite the conventional loans?
They absolutely are. And I don't want to take away from the folks that are building fast pass for the easy ones, right? Because that's where there's high value right up front when you have your fast path for the easy ones.
Yep.
But there a couple things I will add. It surprised me when we turned on our integration with Freddie and Fannie that we were only seeing 30 to 40% that got rep and warrant. That actually was a surprise to me. And it's not uncommon. It's a great value, but why we're not seeing more? Now, the
Yeah.
good news is with the use of a product like Candor, you're going to get rep and warrant, whether it comes from Freddie or Fannie or it comes from Candor. So we're giving
Yep.
you our calcs along with theirs. But that 70%, as we reimagined the Candor platform, we took that into consideration, saying all loan types you can now use the platform for. Now you're not going to get the same amount of value for non-Candor eligible files, but if you want to run a USDA loan, a non-QM loan, we'll still do the indexing classification extraction. There's a pickup there. It saves your setup team.
Yeah.
We're also going to identify any sort of data validation discrepancies on the IRLA. There's a pickup there. We're going to allow you coming here in the next by the end of July to fully update the IRLA automatically with our discrepancies. There's another pickup there. So the reality is, yes, technology should be doing, I would say, closer to 90% of all loan types, but you're not
Mhm.
going to get the 90% coverage across all loan types. So conventional FHA, the mainstream VA, yeah, you're going to get a significant more coverage from the technology. Some of the other products, you're only going to get maybe 30, 40, 50% coverage by technology. But the short answer is this industry, I'm going to say we as lenders, we need to be using the technology even if it's only providing a 40% lift, right? That's still 40% more than we had before. And it's understanding, and I think the other piece that wasn't completely brought out is there are hundreds of different technologies that do hundreds of different things. And it's finding those right solutions that either bring them all together or a single solution that can do most of it. So you're not having disparate systems that you're trying to connect. And that's part of what we tried to build with our new platform.
Yeah, and integrations are painful. And Steve also mentioned, that Candor was was not just a technology decision, it was an organizational one. And Steve, talked to us about the education piece and how you have approached getting the team up to speed and they're ready to adopt.
Yeah, that's been a fun time. So, I think for us, it was all about starting small, right? So when we first, started working with Candor, it was myself and our underwriting team lead, going through some loans together, right? Making sure we understood the output and what was happening. Then, it's like, okay, I'm going to take this processor and this originator, right? And so we start a little one-on-one in our group of four. And then we just started building on that, right? And it was okay. Let's bring in another originator, another processor, another originator, another processor. Okay, let's bring in another sales team, right? And just start gradually, gradually exposing the entire organization, whether it was processor to processor, And then for me, it was back in October. Even throughout this, I scheduled a daily Monday through Friday, 9 to 10 a.m. Candor open hour where anybody in any position could come in, ask questions, ask to just see me work through it, right? Ask file specific questions if they had challenges. So whether they were an originator, a processor, an LOA, an underwriter, whoever it was, we just gave them access to the experts, our underwriting team lead and myself, just on a daily basis, and just started, working. It's still going on today. I still do it every day, Monday through Friday. So, and it's still a challenge sometimes, because Ed spoke about it. Just it's not just an underwriting impact, right? It's everybody.
Yep. Yeah. Yeah. And I think that is really the difference. Being able to see the loan officers who lean in and see cleaner files with less downstream friction, faster path to closing, when the loan officers are engaged early, and the relationship the processors have with the loan officers and the underwriters. I envision that there's less he said, she said, it's their fault I missed this type of, it's like that there's less back and forth on that. We're winding down, and I want to let everyone know that Candor Technology will be participating in our Tech Summit, and it will be the industry's first live RFP of AI underwriting technology. So 5 of the top AI underwriting companies that you all have heard of will be coming together in Dallas on August the 13th, and they will be answering RFP type questions and showing outcomes of under AI underwriting of loans. And we look forward to seeing you there. But for today, that is a wrap. What a conversation. Measurable results, a platform that keeps evolving, and a team that's still finding the ceiling. That is exactly the combination we like to see with our member community. So thank you to Candor Technologies for sponsoring today's show, and a huge thank you to Steve and Ed for being so generous with real numbers and real lessons. And we'll be back next week on June the 30th at 2 p.m. Eastern on LinkedIn Live. And if you are not yet a TMC Lender member but would love to find out more, please reach out to me and to Ed and the team. You're at the right starting point. Thank you so much for today's conversation, and cheers until we see you next time on the SIP. Thank you.
Thank you.